Alright, I give a quick update of how I put orders into my system at IB, which is unnecessarily complicated. I have my orders here with my long and short, and how I get there is a different story, but how I put it into the system I want to clarify now. So this is my portfolio at the moment, and it's pretty neat. It's not fake, it's real, but that's a different story. Let's go now to how to put the orders in the system. So I just did one and I transmit that one. That's already done. That's which one? A, V, and V. So I went long. I don't work with the limit take. I just work with limit stop so far. So they usually fall out after some time. I can tell you out of 60 positions or so, only 20 have survived, but they have profited more than 1% each, of course, and that makes the whole thing viable because I go with stop losses of 1%. So the portfolio on this one is $2,000, 1% is $20, and the stop loss on this one is 27.7. The current price is at 31.82, so that's a difference of like $3 to $4. Let's assume it's $4 actually, so I have to adjust the quantity accordingly, so that will be 5 stocks, because what is this? Let's go through this. Portfolio is the total size of the money you own on this account. Let's not assume that you loan any money through margin. This is your real net liquidity, and 1% is how much is that? $20, right? So we take the current price. This is a long position, so we buy. Current price is 31.8, and we subtract 27.7. So that's our stop loss. That's when we sell it, and the difference is something like not something like it's exactly 4.1. Let's make it easy, let's call it 4. Okay, so $4, and whoopa. So $4, how many times does 4 fit into 20? Because you can only afford to lose that many stocks. 20 divided by 4 is obviously 5, so we can only buy 5 stocks, because if you lose all these 5 stocks, you all lose them at the price of 27.7, and since you bought them at 31.8, you lose roughly $4 plus commission. Let's exclude commission at the moment because it's a different story. Only $1 at IB, so it doesn't really matter that much. So 5 times 4, and you have $20. So you lose 1. And why do we do this? Because we can lose 1% and lose 1% and lose 1%, and then you lose 3% of your whole portfolio. But within these 3, you probably have one winner, which will have more than 3%. So let's say you have a loser of 1%, then you have a loser of another percent, and then you have another loser of 1%. Then we get a winner, and that winner will be something like 5%, at least. Usually at least 5%, because these are growth stocks, and or even more volatile. And this is how it goes. You have to assume that you will definitely win 1 and 3, and with more than 3%. And that has been the case so far. But let's go back. So this is what I've done. I will transmit the order, and it will go to market, because I have a market order here and a stop order here. It's not a limit order. Limit orders are also a good idea if you're patient and you want to wait for a pullback here. Then you can also get a limit order, so only that price that I'm saying, so cheaper than this. But I'm not patient on this one, because I don't care, because you make all the money through the technical analysis. So you make all the money here in finding what the perfect stop loss is and what the perfect stock is, through looking at the price dynamics. Okay, let's transmit this. So this is, it's not yet 9:30 in New York, so I have to wait a little bit until this will be performed and processed. So let's go to the next one. And now I want to challenge you to think with me. So we have BCLI, which is at 365, and we're going short. So this is our stop loss at 365, excuse me. So let's look at this one. BCLI, bump, and ignore the MACD, ignore the ATR at the moment, it's not important for you. Just look at the price dynamics. So you can see here daily candles. Let's zoom out a little bit. Okay, this has been like the last year, it's like 2020, it's a downtrend as we can see. Long EMAs, short EMAs, all of them are like, nope, not a good buy, not a good bullish sign here. So we go bearish on this one, and then we have a rather strong downtrend once again since the beginning of April, something like that, and it's just confirming the whole story downwards. But we work with stop losses, so 365 would be the perfect stop loss. That will be around here. So I work with shortcuts because otherwise everything takes so much time. So I have the sell on the control and Y, and I put it in here. That's my sell. Then I put around the bracket order, and since I said I don't take profits, I let run. I kill the profit taker here. If you don't know the basics of these things, you have to Google that, or I will have to make another video for you guys, but I guess there's enough information on this, because you're taking profit with a limit order on the other side of the trade. So let's go in with a market order, because again I don't want to wait for any price action to confirm. I believe the theory is strong enough as it is, and the real magic really comes in the risk management. That's where everything makes sense economically. So we're at 304, that's the current price of 310 right now, 310, and we have a stop loss at 365, that's 55 cents away. So we put the stop loss here at 365, 55 cents, right? Yes, right. And what is that 55 cents we have, right, per stock that we would lose? And we have $20 is 1%, and we don't want to risk more than 1%, except you go really risky and you say, all right, I'm risking 2%, so it's $40 because you're really safe about this one. But let's assume this is just 1%. I have these classifications here. I call them A, B, C. Really simple. A is 0.5% because it's excuse me, A is a good rating, it's 2%. So because you're sure about this one, you're willing to risk more. B is 1%, you're not willing to risk more than necessary. This is a standard risk. And C is you're really not risking much because you don't know about this one. 0.5% if it's really like you don't know much about the stock. Your technical analysis could be so off. It's very volatile. So risk on, and you de-risk via your stop loss. Okay, so we have here a rating, all of them have a B rating, so 1%. I go in with $20, 55 cents. How many times can we put it in there? Let's say 40 times. I'm assuming 20 divided by 0.55. It's 36 times. Alright, let's make it 36 times. I usually round off and round to full numbers. Let's go 40 times. Who cares? 40 times. Oh, it's offering me 35 times. Okay, I'm lazy. Let's do it this way. 35 times, 50 cents. We're gonna lose. We could lose this at 365, and that would be $20. And let's go. Boom. Oh, no, 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 no. I accidentally put this in as a market order. That is not correct. We don't want this to be a market order. We want this to be a sell order. stop loss. So back to this. Oh, beautiful. Okay, really important that you don't screw up your order types and your numbers, because you know this can cost a little money if you don't really pay attention. We are on the right side selling this one because we're bearish, and we transmit, and we transmit, and we transmit. Okay, that one. Let's go through two more, and that would be enough then, I hope. So we have another long example here with the BHR. Boom. And now 535 is our stop loss. It makes perfect sense because if you look at the dynamics here, we have an uptrend. All the EMAs are confirming it, but if you take out the EMAs, you can simply see it right here, right? It goes up 555, and here is the last big pullback. So we have support here around this area. I support this idea, and 535 is also supportive because we have these pivots here, so strong pivots at these points, and 535 is right underneath. So beautiful stop loss here. So let's go long, and 535, and the current price is 611. So let's say 6.11. Let's assume, given facts, that this one won't change gap up or gap down through the market opening. It's still a possibility, but and it also happens sometimes, but usually it doesn't. So 611 minus 535, it's 60, 70, 75 cents. 75 cents into 20. How many times? 10 times, 20 times, 30 times, around 30 times, because 7 times 3 is 21, right? So let's assume it's 30 times. Or let's double check for you guys, because I'm a little bit fast with my calculations in my head. 20 divided by 0.0.5, 26 times. Okay, so I said 20 times. Yeah, doesn't make much of a difference. A few dollars on this level. If you work with millions, I would recommend going with all the digits, but I just put in 20 times or 25 times. Alright, let's go. 20, boom. I go bracket order make automatically dependent choices. So if you are sell, you automatically are out, and I love that because sometimes system doesn't really go with the same quantity or doesn't really work in groups. Anyways, this is our take profit because it's a limit order above the price that we're currently having. So kill that one, and then we already have 25 times in the system, and we just have the wrong stop loss price. So we go to 535. Boom. So done. Let's change this to market because I'm not waiting for any confirmation on this one. We are long, right? Yes, we are long. That's our base order. Market base order is long, it's buying, and market price stop loss 545, 25 times. Perfect. Transmit, and gone. Out there. When the market opens, it will probably trigger right away. EQR, last one. We are long. We're selling at 89, so this is probably a very high price stock, and we cannot buy a lot of these. We'll see, because higher stock prices and the potential volatility is always proportional to their price. So if they have just 1 or 2% volatility, it's a larger absolute value. So we have here EQR at a price of 93.24, and we have a stop loss is 89. As I said, it's $3 away, $3.20. How many times does $3 or $4.20 fit into 20? Not many times. So let's go. I buy, I kill the limit order, and then I put this into market, and then let's do this for you guys. So the current price is 93.4, I think 93.2, and minus 89, you have something like $4, right? $4.2. So $4 into 20, we had this already, only fits 5 times, so we buy this only 5 times. And it automatically changes, and that's it. Now, what is this? A sell stop at 93.88? What did I do? Am I going short or long? I don't know. Why do I have a sell stop at 93? Because I didn't adjust the price. So that's really important, always to double check that you have done everything correctly. And there we go. So we have a sell at 89 and we have a buy at 93, and this is perfect exercise for you guys. So technical analysis is the skill set you have to have when you go through these stocks, and we can look at this one. We can see here it has an uptrend since October 2020, and so this is almost 2 years, so pretty strong. It's losing steam around here, but it's still going up and strong. And here we have something like a resistance, and if it breaks the resistance, there's more room for going up. And you can see the ATR is around $2 in a day, so we pretty soon get stopped out or not. So these stocks will prove themselves as winners or losers pretty soon. So I transmit this order. 89, only 5 pieces, go. And that's the strategy for working with IB, with working these shortcuts. On request, I can give you my list. It's all these. I don't use many of them. I use buy and bracket and transmit and change to market, and that's pretty much it. Now, if you have done all of this, your homework, then you can check it up on your, and IB is really a big beast of software, I gotta say. So we can look at our headquarter, but this is only positions you already have. So we can see we had way more positions than this. So I'm not doing this alone, I'm doing this with an analyst who helps me finding the stocks, and he gave me like 40 positions. And as you can see, most of them have died out, but the ones that still live, they live and thrive. So you can get up to 100% on a stock, and this has only been a couple of months ago. So really good stuff here, but I really want to show you the portfolio. Where's the portfolio? Charts, index, historic chart. No, we don't need that. Classic TWS. Here we go. Classic TWS. Right. So here we have all the pending orders, and then we can see we have only RIG and DBI. Those are sell orders on long positions. And why do they not? Usually you want to have a sell position on all of these, but it's been more than 3 months, and some stop orders they deactivate on IB after 3 months. You cannot change anything about it, so you would have to readjust the stop orders after every 3 months. So that is due diligence I actually didn't do, but we're very much in the green. Probably would have to do that. Probably would have to adjust the stop losses also to take profit or break even if I did that. But yeah, only recently we have, sorry for all the switching guys and the noise on the keyboard. So we have RIG and DBI on a sell and on a sell. And where's DBI? So we have 2 long positions that have a stop loss because they're rather recent. And if I adjusted the stop loss, I would have to go to break even because right now it's at price. What is the price of my stop loss? I cannot see that. Why is it so obscure? Alright, this will be another video once I have figured this out, but definitely would have to adjust price of the stop loss. Okay, but all the other orders that are fresh, because when you're fresh in the game you don't really know direction, these guys have all stop losses and they're on the market. And let's see, we have one short, one long, one short, and two longs again, and this goes here, the same short, two longs. So this makes perfect sense. Not a lot of stocks, but enough to make you happy. And if you continue doing this and do this as a side business or as a hobby, or if you want to get into it and as a learning process, then it's really worth the time. Alright, I hope I could help you in some way, and see you around.